What's going on in silver right now is absolutely wild. I didn't even know that this was possible. I mean, I guess theoretically I knew it was possible, but to actually see it in action is completely mind-boggling. So one guy by the name of Bian is actually shorting more silver than exists on the Shanghai Futures Exchange right now, and they weren't happy about it. They froze his account, and he now has this naked short position that he cannot get out of for at least a month. Now, it's theorized that this info was actually leaked by the Chinese government because they're trying to expose what this guy is doing. And as I said before, it's kind of the opposite of what the Hunt brothers were doing. They were trying to drive the price of silver up by going long on silver, and they were using leverage. And eventually the CFTC had to step in and not allow them to trade anymore, which is what crashed the price of silver back in 1980. And this guy is doing the opposite. He's going short on silver to try and crush the price lower, and the Shanghai Futures Exchange had to step in and prevent him from trading. So it's possible we could see silver price go back up now that this isn't going on anymore.
The trader's strategy relied on overwhelming the market with paper supply, forcing prices lower through sheer scale. This tactic mirrors historic attempts to dominate silver pricing, but in reverse. Instead of driving prices up through accumulation, this bet aimed to crush prices via naked short selling. Regulators stepped in, halting further trades and effectively locking the position in place. With no ability to adjust or unwind, the trader became vulnerable to the market itself. Once the size of the position became public, it shifted sentiment dramatically, turning what was once a calculated gamble into a potentially catastrophic liability.
But you can see here the size of his position, 450 tons of physical silver. And if you compare that to how much silver is in the Shanghai Futures Exchange warehouse stocks, it is 107%. So that's a massive position. And in fact, that info I just showed you is already old. We have some breaking news. Just today, nearly 20% of the remaining silver was removed from the Shanghai vaults to the tune of 62.6 metric tons. So their total inventory is now down to about 350 metric tons, making his position even more crazy. So now he is short about 130% of the total silver on the exchange, and again, he is frozen. He can't make any changes for at least a month. With his massive naked short position now publicly exposed and frozen, the market itself is likely to inflict maximum pain on Bian's short. Chinese regulators stepped in yesterday and essentially froze Bian's position, suspending his ability to add to his shorts and publicly exposing the size of his position. The revelation of Bian's naked short silver position appears to be a calculated move by Chinese regulators, who facilitated the leak to Bloomberg through anonymous sources close to the exchange. This public exposure serves as a stark message and warning to Bian and any other traders contemplating similar naked short positions in the future, emphasizing that outsized bets disrupting market stability will not go unnoticed or unpunished.
At the same time, physical silver inventories began draining at an alarming rate. Large volumes were removed from exchange vaults in a matter of days, sharply reducing available supply. As inventories fell, the frozen short position grew even more disproportionate to remaining stockpiles. This imbalance matters because futures markets ultimately depend on physical settlement credibility. When paper claims vastly exceed real metal, confidence erodes quickly. Traders begin to reassess risk, premiums rise, and volatility accelerates. In this environment, even small price movements can trigger outsized reactions, especially when leverage dominates trading behavior.
So how much exactly did he profit from pulling this stunt? Well, his position, valued at hundreds of millions, was designed to profit from an anticipated reversal, and profit it did. Following a flash crash where silver plunged over 16% and nearly 30% in some accounts, Bian reportedly netted around 500 million. Whether Chinese regulators will allow Bian, who currently lives in Europe, to remove these winnings from China remains to be seen. They go on to write that they believe silver's bull market is far from over, fundamentals remain strong, solar panel production, electronics demand, and safe haven buying could propel prices higher, potentially to 150 to 250 per ounce in the next surge. Additionally, we do have some breaking news. The U.S. Embassy is telling citizens to leave Iran now. So when it comes to wars and geopolitical issues, we know that this can be very bullish for both gold and silver as people flock to the safe haven assets. So this is one more thing that could push the metals higher.
The short seller reportedly profited heavily during the initial price collapse, capturing gains as silver fell sharply in a flash move. But regulatory intervention suggests authorities were less concerned with profit and more focused on market stability. Publicly exposing the position sent a clear warning. Excessive leverage and destabilizing bets will face scrutiny. Whether those profits can ultimately be retained remains uncertain. More importantly, the episode underscores a broader shift. Regulators appear increasingly unwilling to tolerate trades that threaten systemic balance, especially in strategically important commodities like silver.
On the flip side, the COMEX and CME Group are doing yet another margin hike for both silver and gold. It's going to be effective after close of business today. So silver margin is going up 20%, gold is going up 10%, and this is in fact the third margin hike in just 10 days and the second this week. So with silver price bouncing around with all this volatility, they're hiking margin once again. They're trying to get the speculators out and try and find some price stability. Look, I wish they would just raise margin to 100% and then no one would be playing this game with the futures market. There would be no leverage, and the only people getting these bonds would be the people who actually want to take delivery of the physical silver. We are seeing a little rebound in silver price. For now, it's up about $6 on the day, and I am getting so accustomed to seeing 10% moves day after day, whether it is up or down. I'm numb to this stuff. I mean, in the past, if silver moved 10%, it would have been breaking news. But now it seems like day after day, it's just becoming the norm. But with this move in silver, it is now once again above where it was at the start of the year. We're about $6 higher than where we started the year at. So silver's bouncing around. I don't know where the floor is. I don't know where it's going to go next week, but I would expect more volatility.
Despite the chaos, silver's underlying fundamentals remain intact. Industrial demand continues to grow, driven by solar energy, electronics, and electrification trends. At the same time, geopolitical uncertainty is reinforcing silver's role as a monetary hedge. Yet exchanges are responding to volatility with repeated margin hikes, making leverage trading more expensive and forcing weaker hands out. This tug-of-war between real-world demand and financial tightening is shaping price action. The result is violent movement. Sharp drops followed by powerful rebounds as the market searches for equilibrium amid shrinking supply.
And look, many silver stackers, myself included, were buying silver 5 or 10 years ago, and we remember when the price was just in the teens. We remember getting silver for under $20 an ounce. That was the norm for a very long time. So to see silver over 20, over 30, 50, even over $70 an ounce just seems crazy to us. And the fact that it went up to 120 is absolutely nuts. It has come down from that high, but could it go there again? I certainly think it could. My prediction for this year is still that silver could go to $150 an ounce. So we'll have to wait and see what happens, but I will say this, silver has already been to 120. It has tested that level, and some people out there actually bought silver for $130, $140 an ounce. So it's not that unreasonable that if silver goes to 150, people will still be buying silver. And we know that the world is running out of retail ready silver, available silver for us to buy. I showed that in my video yesterday, and we know a lot of silver is also flowing out of the COMEX and clearly the Shanghai Futures Exchange. A lot of silver is flowing out of there as well. So the stockpiles of silver around the world are getting smaller, and in fact, the US government might start a stockpile stockpile of their own in the not too far off future. So I think silver has a lot of things going for it. The fundamentals have not changed.
Silver prices now move in ways that once would have been considered extraordinary. Levels that seemed impossible a decade ago are now part of the conversation. While short-term direction remains unpredictable, the long-term picture points to tightening availability and rising strategic importance. Physical stockpiles are declining across multiple exchanges, and discussions of national reserves are growing louder. For long-term holders, this volatility feels less like chaos and more like transition. The silver market is being reshaped, and once this adjustment phase ends, price discovery may look very different than it has in the past.